All right, you guys. Woo-hoo-hoo. Thank you very much. So glad you're all here. What we're going to dig into today, you guys, this is a crucial training. You're going to learn how to increase your cash flow right now so that you can have less stress and more calm later through the holiday rush and beyond. Listen, have you ever heard the phrase that a big door turns on a small hinge? So just think about this visually. So you have a door here. So let's just say my hand is the door. The hinge on the door, the two little the hinges are small compared to the size of the whole door. I mean, the whole door is like this, and the hinge is not even like, it's probably like the size of my ring, right? It's small tweaks like that can make such a big difference. And that's what we're going to talk about today. And what I want you to know is that everything that we're teaching has been proven. We know it works. We've tested it for decades, and we've done it with our clients. And like I said, you're actually going to hear an actual retailer talk about her experience about this later. And so, yeah, I'm really excited. Let's dig right in, shall we? Okay. But before we do, I want you guys to pat yourselves on the back. Come on, Andrea and Tracy and Stacy and Mary Ellen. Woo-hoo-hoo. Pat yourself on the back. A round of applause because you took the time to prioritize you and your store, and you joined me today. Let me tell you right now, you are head and shoulders above 99% of other retailers. And I take that so I consider it such an honor to be able to help you. And I appreciate the time that you've given us today. We're so happy that you're here. And listen, the first thing I'm going to dig in with right away are two topics that many retailers, if not most, are majorly confused about. The first one is that we have to recognize the difference between cash flow and profit. There's a difference. A store can be profitable, but then go bankrupt from cash flow problems. It happens all the time. How many times have you looked at your financials, your balance sheet, and your right? Can I just get an amen here? Does anyone else ever feel like that? Like you look at your financials and you're like, I don't even know how this belongs to my store. Like I don't even know how this is true because they don't really make sense. Anyone else look at their financials and they're confused? Come on, you guys aren't being honest with me because I know I'm not the only one, because I remember as if it was yesterday meeting with my accountant and him saying to you, and this is before I did everything I learned. I'll get into that in a minute. So him saying to me, hey, Kathy, his name was Don, by the way. It's hilarious. I just remembered his last name, but I shouldn't share it. Don said to me, he said, Kathy, I've got good news and bad news for you. I was like, oh, okay. I said, well, why don't you give me the good news first? And he said, the good news is that you were profitable. I said, really? I said, wow. I said, well, that's surprising because it felt like our cash flow was so tough all year, And he said, well, that kind of leads into the second thing, which is that the bad news, which is that you owe taxes. And I don't really see where you're going to have the cash to pay it. I was like, wait, what? Wait, what? I mean, this was really the beginning of all of my problems. I mean, we were so close to bankruptcy, and I got so mad that, I had tried to find this information out and no one ever talks about this. And I'm so grateful for you guys and your honesty. Like Tracy said, it's confusing to me. I know. And Andrea says sometimes, right? Sometimes I get that. That's exactly true. Right. You said you have a great profit, but you struggle with cash flow. I just didn't understand that because the be all end all is profit, right? I mean, that's what you always hear about. So the thing I want you to understand, the thing I want you to know about this is that, well, and actually I want both for you, right? But you see, so the cash flow is obviously the money that flows in and out of the store, whereas profit is what's left over after sales and after the expenses have been deducted. But also there's accounting rules that end up playing into your profit. And we don't all know those rules because they're accounting rules. They're not retail rules. I mean, that's the part that can get really wicked confusing. I mean, and honestly, the biggest difference between the two is the fact that it's the difference between success and bankruptcy. That's absolutely the truth. It's absolutely the truth. And what I find is that they just don't always match up. And the thing is that The thing is that you have to know how to pay attention to it all. What we have found is that if you focus on the cash flow, the profit happens. So that's usually in the beginning of working with a client, a new client, that's what we tell them to focus on. And they start to freak out. And I'm like, no, don't worry. We've got your back. We're looking at the profit too, but let's focus on the cash flow. Okay. The other thing is that so that's the first confusion that people are confused about. The second thing that people are confused about is that when they struggle with cash flow, you automatically jump to the biggest solutions. How can I increase sales and cut my expenses? And I'm not saying those are wrong actions to take. I'm not saying that at all. But after more than 30 years in retail, I mean, I have found a set of small but simple, really, truly simple, but proven tactics that are essential to keeping your cash flow going smoothly. It makes all the difference in the world. It makes all the difference in the world. You see, what's the first thing that we're going to talk about today is how to create a cash flow projection. This is something that people don't always do right. And so I'm going to go through it, because when you start your business, you really want it to look like this side right here, right? You want the water, look at these blue skies and the water's just pouring in. This is what we all envision our cash flow to be, the stream. It's like if you're standing here, like really, like take this in. Can't you just hear the water roaring through there, right? Whereas over here, it's crickets. Like it's just stopped up, like the cash is not moving, right? I'm not going to even ask you, well, how many of you have experienced cash flow and how it felt like this, as if the water had just turned off, huh? I'd love for you, tell me, right? Tell me who has felt like that before, whereas if suddenly the water just turned off and there's just bills everywhere and there's not enough money to pay it. And like, right. I know it happened. Yeah, right. I mean, that literally happens to everyone. Yeah. And with the pandemic, hey, Don, that absolutely, obviously our stores were literally closed, right? That's very true. Mary Ellen, thank you so much for your honesty. I really appreciate that. I really appreciate that, because what I love so much about our group, about our community, is how honest people are with each other. And the thing is that your honesty, your willingness to admit that you're in a cash flow crunch right now will absolutely it helps someone else, because it's going to embolden them. Because you guys, it happens to everyone. It happens to really successful retailers. It happens to everyone. It happens to the big guys. It happens to, it happens to Neiman's. It happens to Saks. It happens to Nordstrom's. It happens to all the stores. It happens to everybody. It's just in knowing what you need to do about it. So this is the reason why a cash flow projection is so important, because when you have a cash flow projection, you can be proactive and you're giving yourself time to see where the dips are in cash flow so that you can prepare and take action ahead of time. That's the thing. That's what makes all the difference. Your cash flow is always going to ebb and flow. But when you're aware of it, it gives you a chance to plan for it. One of the mistakes I find that always happens around Christmas is that sales for many stores, not all, like my store didn't do a huge business in December, but for many stores, they'll do a big business in December. Oh my gosh, I'll never forget the one client she was a gift store. And her kind of store, she literally did 50% of her whole year's business between November and December. And we had barely been hanging on the whole year. Like it was tough. But so we get to November and December and I was like, oh my gosh. And I showed her the cash flow. I showed her all the numbers. This is what's possible for you. And then when we met in January, and I showed her what the next year's cash flow is going to be too. And then when we met in January, I said, okay, so this is how we're going to take care of the bills, blah, blah, blah. And she had that experience. And I understand. She said, oh my gosh, I was so excited because there was so much cash. So I decided to treat myself. And she went out and actually what she did is she spent $5,000 on a tree for her backyard. And like, it was, anyway, the point is that I don't begrudge her that, right? I mean, I want you to be happy, but I also want you to make sure that you've got money going forward. And for her, every single cent right then made a difference. So that was the disappointing thing about it. But I'll tell you that when you can do this, when you can calculate your monthly cash flow, it makes such a difference because then you can really own it. And I actually had her fill these out then the whole, like I had been filling them out for her, but I had her fill this form out and going forward. And so it really made her own it more. So that's what I want for you guys. So let's go into what info goes into a cash flow projection. Okay, the first one is sales or revenue. It's a conservative estimate. You're looking at it. This is most often the mistake people make is that they think they can do a lot more than they can do. And so be conservative. Be conservative about what you think your estimate is what you think you could do. Next, it's your operating expenses. And the way to look at the operating expenses is to look at look at all of your expenses for all of last year. Okay, so you can look at your profit and loss and take that expense number, take what all those expenses were, and then making sure if there's any other listed in there. Are there any others listed up in the cost of goods section? Is there shipping up there? Is there anything else, packaging or anything else up there? Also, is there any other loans that you pay? Do you have any other monthly loan payments? You see, your monthly loan payments aren't included in your profit and loss. So any other monthly loan payments that you have to a car or for a vehicle or to the bank, those also have to be added to that expense number. And then you divide that number by 12. You use the average of the amount that you pay out every month, the average, so that you're holding all this aside. So you're holding it all aside. Like if you have a big bill come September, this way you will have saved up until then, right? So we're holding that amount aside. So that's why you can see in the example right there, why the operating expenses are the same number for January and February, because we're holding that money aside, right? The next expense, yeah, and any questions, go ahead and hit the Q&A tab and put them in there, and I'll be happy to go through them once I get through all this. The next thing is the inventory received. This is your inventory. This is how much inventory you received that month, all right? It's not what your accounts payable is, which is listed in your balance sheet. I had a client just ask me that the other day. I thought that was this is literally the inventory that you receive every month. Okay, that's what we're going to do. That's what we're going to look at things on a monthly basis. That's the way it works the best. And just a little side note is that, so about inventory being received, our private clients, our one-on-one, our profit clubbers, which I see some here today. I'm so excited you guys are here, and masterminders, they get this information given to them every month for every class. That's what an open to buy is. An open to buy, an OTB, is simply an inventory budget. And if you're interested in getting that, it would be a joy and an honor to help you with that. That is the thing that that was one of the things that when I resourced up and got a coach, that was one of the things that I got, and it made all the difference in the world because it's your single largest expense. So if you can make sure that that's controlled really well, it turns everything around for you. So don't hesitate to talk to us, because that's exactly what we do on a monthly basis. And it's really powerful. In the interim, though, I also want you to know that you can also just look at what your sales are for the year, and you could roughly just look at 48% of your year's sales. And most stores, not all, depends on there's a lot of nuances about it and depends on the kind of store you are, but most stores should spend no more than that over the 12 months. Okay. So the next thing about it then is the cash flow. So you can see where that number is there, and the negative 6,792. That's what the cash flow is for that particular month. And then the cum cash flow on the bottom is how the cash flow continues to go. Now, what I want you to know about this is that's the other thing that's super critical about this is to know what your terms usually are. Don't get too hung up in this. Like, don't split the dollars out and everything. Just what are your terms usually? So for here, just for ease, I decided to show you COD. So for example, so how this would work is that you did $32,000 in revenue. Your operating expenses were $22,792 minus $16,000 of revenue of inventory received. Sorry. 6,792. That's what the brackets are. Negative 6,792. 32 minus 22 minus 16. 6792 negative. So then that's what goes down here, 6792. And then for the next month, you can see it's 27,000 minus the 22,792 minus 12. Then you end up with a negative 7,792. And so then now you add these two numbers together. So now you're negative 14,564. There you go. So that's how in a cash flow statement that you look at it. The one thing I want to answer, the one thing I wanted to caution you about is that terms make a huge difference. Now we have a template that that we're going to show you that you'll have access to. I'll give you the link for it in a minute. But what I want to tell you is that COD terms kill cash flow. COD kills cash flow. It makes such a huge difference when you can have 30 days to pay for things. It makes such a big difference. The difference between COD and 30 days is actually 10 times more than the difference between 30 and 60 or 30 and 90 even. You'd think that that would be even better. And for sure it all is, but you've got to do, if you have a situation where you're mostly COD, you've got to get out of that situation. And yeah, and there's ways we can help you with it, because that's something that you have to, then there's specific ideas we can give you about that. But COD kills cash flow. Kills cash flow. So you can see that this is just looking at all the money that comes in and out, all the money that's going in and out of the store. Now, the actual document that we have for you is right here. You can go here to get the copy. All right. But let me tell you that what I would, in fact, I should have just, well, anyway, what I'd rather have, so you can go ahead and download it there, and you can see that actually on that form, it assumes that you have a net 30 terms, because that is what the majority of stores have, is net 30. So that then, to use this example here, so this cash flow, the formula that's embedded in this cell right here on the one that you'll get on your template, actually says 27,000 minus the 22,792 minus 16. And then that's what the cash flow is here, because for most people, they have net 30 terms. That's most common. So like I said, that's what I want you to do there. So let me see what the other thing was. I was going to go over it really quick. All right, so now let me answer. So that's where you go for it. So now let me answer Craig's question. So Craig said, Craig asked a great question. He says, so why are you counting inventory received in a cash flow statement? Inventory is only an asset until it sells. Because I'm not counting, I'm not talking about any sort of accounting terms here. We are just talking about cash flow. And from a cash flow standpoint, though, that inventory you get in has to be paid the next month, right? If you have 30 days terms, which you probably do as a gift store, you should. And you've been open now long enough now that you can for sure have terms. So that's because that's when it gets paid. I don't care. I don't care the asset. I don't care what the asset is. That's not what I'm looking at all. I'm looking at cash flow. That's all I'm looking at. And no, he said, I could understand inventory as cash flow if you have a store where inventory turns quickly, but not everyone has that. Do you need a turn rate of a certain aspect to treat it this way? Another excellent question. I would say that you need to have the turn rate of a successful store. Like, your inventory has to turn 2 or 3 times a year. Your inventory should turn that much. Like, you can't be profitable if it doesn't. You can't be profitable if you're turning less than twice a year. So that's how that works. A gift store like yours, certainly there's a couple of stores, like furniture stores, struggle with this because they have a very long, because their turn rate is very low. But a store like yours, Craig, should have a 3-time turn. And if you don't, like, really talk to Anita, because she can help you with it for sure. That's for sure, because she can help you with. So why not? So Stephanie says, why not use credit cards, which are essentially net 30 and gets points or dollars back? Another excellent question. A+ for all of you for these wonderful questions. So Stephanie, there's nothing wrong with doing that. But let me tell you, the problem with getting things COD, it's also just becomes very difficult to control things. It's just much simpler, I can tell you, to be able to have net 30 terms where you get the bill, you have an opportunity to check all the inventory and how is all the inventory doing? Is all the inventory, is it all okay? Are there damaged goods? Are there things you need to take care of? Because with, if you have COD, you've already paid for it. And it's so hard to ever get money back from vendors if you're trying to get it back. Like, that hardly works. So that's the reason why I prefer net 30 terms. But yeah, get net 30 terms and then and then pay for that. And then you can pay a COD. All righty. So that's the term for that. Thanks, Cecilia, for answering questions. And now let's dig into the most underestimated number of retail. All right, so now you have your projection in place, but let's look at this teeny, small but mighty tweak. Like I said, the most underestimated number in retail. And if you if you've been neglecting this number, you're not alone. It's what we find that it's the situation for everyone. It's the number I'm talking about here is your initial markup or your IMU. This might be the most powerful, but also the most overlooked stat or KPI in retail. It literally means how much you mark your inventory up when it arrives in the store. In the past, in the olden days, retailers would operate with what they called a keystone markup, which means that they would just double their price. And that was they would double the cost, and that's what the retail price was. So that represents an IMU of 50%. But you can't afford to do that. Let me show you how just having a small increase in your IMU has a huge impact on your profit. We're going to look at two stores that both spend $250,000 on inventory. If you take a 50% IMU, that $250,000 at cost of inventory becomes $500,000 at retail, right? That's what it becomes. But store two, a richer revolutionary retailer for sure, they're taking this $250,000 and taking a 55% initial markup, which means that this $250,000 now represents $555,555 of inventory. So you can see right here, she has this retailer has $55,555 more of possible profit. It's a cushion against markdowns. Can you see the massive difference that it makes when you tweak this number just a little bit? Raising your IMU and creates more cash immediately. Let's dig into what this looks like. Let me give you a visual of it. Let me show you about the pieces of pricing. So if we have, I want to show you a visual of it, right? So if you're using that 55% initial markup we talked about for a $55 product, what that means is that the cost of the product is 45%, which is it's $25, right? The IMU then is 55% of the price, or $30. So the IMU and the cost together, these two equal 100, right? And then these two equal the price, the retail price, all right? So now how this works for you practically, it means taking a candle that costs you $10, and instead of pricing it at 20, it means you're going to price it at 23. And that $25 blouse, instead of being 50, is going to be 55. Is going to be 55. So to determine what your initial markup is for all the inventory in your store, we take the retail value of all of your merchandise right now and subtract the cost from it. And then we take that difference and divide it by the retail number, and multiplying that times 100 to get your average IMU percentage, which is a powerful number to look at, you guys. It's such a powerful number. Let me plug some numbers in to make this easier. So if you have $349,000 at retail and you're subtracting $149,000 at cost, that's what your cost value is. That leaves you, so that says there's 200,000. So 200,000 divided by 349,000 equals 0.57 times 100 equals 57%. Equals 57%. And the thing is that if your percentage is 50% or less, you guys have room to create instant cash right now. We want your initial markup to be a minimum of 55 to 60%. So the difference where you are and that goal number is where you can take action right away. One of my mastermind clients said that this was like so eye-opening for her that when it's slow in the store, she literally walks around the store and looks at what she can mark up, looks what the value of things are and where she can get a couple extra dollars of things, right? Because she said then that's how she felt like she was making more money even if the store was closed. It's incredible how powerful this is. Okay, now there's one question I know you're all asking. There's a couple questions. Like I said, you guys know I speak all over. In fact, if there's any organizations or trade shows that you think I should go to or anybody you can introduce me to, I'd love to, because yeah, I love to talk about all this and I do all the time. And so what I'll tell you is that the first question I get about this usually is what about merchandise where the vendor sells the price because if you have to deal with MSRP. And what I want you to know is that for sure, you cannot increase your markup on every item in the store. I mean, books or cards, for example, or some vendors that are big, huge, that are all over, like toy stores or kids stores with Lego or with Playmobil or like Nora Fleming for gifts. I mean, there's some stuff that you just can't mark up any more than what it is, right? And for sure, I know that. But what I'm telling you is that we're looking at the average. So they're for sure items that you can only get 50% on, right? But where can you get 60% or even 65%, right? Where can you go for those higher amounts? You see, this makes it even more important because I know that everyone has market controlled prices or manufacturer controlled prices. So that's why it makes it even more important to aim for higher MMU on everything else. And also to look for merchandise that you can specifically use to take that markup up. Always check the sales sections of Fair and ask vendors, do they have any merchandise? Because it's incredible the power of being able to increase that initial markup. That's why you have to know it. So now let me show you how you can actually aim for this higher markup. I want to literally go through the math. So you take your cost divided by 0.45, which is the cost percentage expressed as a decimal. So for a 55% markup, like I said, this is what you'll do. For a 55% markup, you divide it by 0.45 because 55% and 0.45, those are that equals 100, right? And so you want 100, you want the cost, and you're dividing it by what you want the cost to be of the price. We want the cost to represent 0.45 of what the total price is. So that's why we're taking the cost, dividing it by 0.45. If you want to get a 60% markable, then mark it by 0.4. Does that make sense? Does anyone have any questions about this so far? Does that make sense to you? Let me use some actual examples too. So like a $25 item divided by 0.45, then that's how that blouse gets marked up to $55. Or if you want to or if you're looking at that and you know it's worth even more, then you could mark it to 62%, right? And then the other thing I wanted to share with you, oops, let me share this with you. Then the other thing that you should be using is our chart, is our profit pricing chart. And you should round the price to the suggested price in this chart to fully maximize your power of consumer psychology. So that blouse that at a 60% markup would be 62. If you look at this, you can see that what we teach is that everything over $25 and everything over a cost excuse me, when the retail price becomes $25, you can just go up by $5. That works great every single time. So that 62, that blouse that's supposed to go from $25 to $62.50, take it up to $65. Take a look at it. I'll tell you that extra $2.50, it's not going to stop someone from paying it, right? And then that's going to cover it's not going to stop someone from buying it. And that's what's going to cover some of your other costs there, right? And some of the other items that you can't mark up. This is where you can get that chart. Oh, Dawn says she loves that chart. That's exactly it. That's exactly it. So yeah, it really makes all the difference in the world. And this is the reason why we say it's so important to make sure that you're looking at marking up rather than just simply looking at like marking it by 2 or marking it, 2.2 or 2.5. It's really important to know this percentage because you want to know what your overall percentage is. You want to be paying attention to it because we want to get this IMU up to this higher percentage. So you've got to make sure you're doing it. You got to make sure you're doing it. Yeah, Craig, I mean, you're absolutely right. Oh, I didn't even see your mark there. Yeah, so for sure, like a 55% markup is a 2.2 and a 60% is 2.5. But I'm telling you that I want to make sure that you understand how important it is to look at these percentages because that's what makes all the difference. That's what makes all the difference. The initial markup of just a few percentage points literally means increased revenue with each and every transaction. So tell me, how are you feeling about this? Are you feeling good about it? And are you feeling that even if your numbers aren't where you want them to be, you now know where they are and you know what they should be? And if there's a gap, that means that you have more cash waiting for you. Taking those couple of extra dollars makes all the difference in the world. Imagine looking at all the items in the store and going from a 50 to a 55% markup is not very much. It's just a couple dollars. But imagine looking at all the items in your store and literally seeing $1 bill or $3 bills, or maybe even a $5 bill attached to each one of them, because that's the extra cash you're missing. Like literally visualize your store and all the items in the store. That's the massive difference this makes. That's the massive difference this makes. So remember, we're looking at the average. That's the huge thing. Any other questions about this? Make sure you ask, because I don't want there to be any obstacle to keep you from taking advantage of this crazy profitable step that you can take to increase your cash flow. Now, for sure, when you're standing there and that dam is empty and there's no cash flow flowing, this of course is a long-term strategy. I get that. I mean, you can start it right away and you'll see a little bit more, but this really will continue to play out for you as you go forward. But realize that you're in this for the long haul. You're in this to be profitable for a long haul. So that's the reason why you should dig into this and start this right now. It's incredible. And now what I want to do is that I want to take a look at 7 small ways that you can approach cash flow on a day-by-day basis. These are things that I've just learned over all the years. They might seem too simple to you and too small, but they sure can make a big difference. Yes, Tracy. So Tracy says this pricing strategy is great. I've been doing it. Yay. But it's helpful to review it and making sure I'm still following it. Oh, actually, thank you for reminding me, Tracy. So what I'd love to hear is, so Cecilia, before I dig into the 7 steps really quick, Cecilia, could you unmute yourself? So Cecilia was a client first, and and I'd love for you to share when you first heard me, she's now a member of our team. Cecilia, when you first heard me tell you that you had to increase your you had to raise your prices like this and increase your initial markup, tell me what your thoughts were and how you approached it.
Well, I thought for sure it would backfire on me because I had a children's store, and our customers were mainly parents. They were very price conscious. I thought for sure there would be a backlash from our customers if I started raising prices on all of our products. And in reality, they didn't even notice. Nobody noticed. And it was just incredible to see how much extra cash I continued, and it kept on growing. Like, I think in the first month, if I remember, after we started doing this, we had like an extra $900 just that first month. But then each month and each year, as we kept on doing this for a few years, like there was thousands of dollars extra in our cash flow because of just changing our initial markup and then following this price guide. And absolutely, like some of you had noted there too, that there were some products that we couldn't do it on. We sold Robbie's slippers, for example, which were sold everywhere, including by the company themselves. And so there were products that we couldn't do it on, but we made sure then that we compensated on any product that we could. And we applied it. We had consignment items in the store. We applied it everywhere. And it just kept accumulating every year. Like it just kept paying off more and more and more. So for sure, do not put this off. Start implementing this right away.
And you were scared, weren't you?
I was scared. Yes. Yeah. Because I thought that people would notice. I thought people would start asking, and they don't, because they are looking at the value that the products that you're selling them give them, not the dollar here or there.
Right. Yeah. Thanks so much for sharing. I really appreciate that. And one of the things that as a client, I always did with Cecilia, and like it's what Tracy was mentioning too, that's what reminded me, Tracy, is that it's so helpful to review this and to just double check how is your overall markup? How is your overall IMU doing? Like what we do for clients is we track it on a 3-month basis, a 6-month basis, and then 12-month basis, and then compare it to last year just to make sure. I have to tell you, I look at that every month with clients because we just want to make sure that it's not slipping. You cannot believe the difference that it makes. And this year, especially, we were really pushing it too because of just not knowing if we're going to have to do some flash sales to increase sales going into spring. We're just not sure what's going to happen in January and February. And so it's like an insurance policy is how I look at it. All right, let's dig into these 7 steps. All right. So the first one is to open up a sales tax account. You guys, I do not know how I hadn't thought of this earlier, but this makes paying sales tax painless. The bank that I went to, and many clients have this, and sometimes you have to talk to your bank to figure out how to do it, but have your bank automatically transfer whatever the sales tax percentage is out of your deposits on a daily basis. Or if they can't do it, I have clients who will look at what the sales were for the month, for the week, and then transfer it themselves manually. But many banks will do it automatically for you. That way you never feel it, and the cash is there in another account just all ready to be paid out on the 20th when you have to pay it out. Number 2, group your operational bills together. Paying them on the 15th is usually best for cash flow, because that way your rent is due on the 1st usually. And then in the middle of the month, you have your operating expenses. Then you have your sales tax on the 20th. In regards to payroll, it's always better, from a cash flow standpoint, to have payroll be twice a month rather than every 2 weeks, because then that makes predicting the cash flow. Then you always know that you have your payroll also due on the 1st, and that as part of your, and then on the 15th with part of your operational bills, right? So that's also really great. It's just a super simple, easy way of doing it. It makes it so much easier for you, because that's the whole purpose of this, right? Is to be intentional. Did you know that you could change your credit card payments? I want to know, did anyone else here know that you could change your credit card due dates? Not your payments, your payment due dates. Did anyone know this? Dawn knew, there you go. Because the first time I learned this, I learned this when I had my store, so I've been teaching this now for a while, but it's incredible. Yeah, it's incredible. Yeah, it's amazing, Andrea, and the other thing is that they'll let you do it a couple times a year, and it's fine. It's fine. So use the steps, the dates that we discussed in the last step, to plan when the best time is for your credit card payment. But yeah, you can change them at any time. At any time. This one, step number 4, you guys, be consistent about managing your cash. When you set aside, I recommend setting aside 1 3-hour appointment every week to review cash flow, pay your bills, and hear this, to handle all vendor billing questions. This is more powerful than you can imagine, because what happens to you, I know you, I know what happens. What happens is that you're wrapping a present and all of a sudden you're like, oh my gosh, did I ever look up, did we get paid? Did we ever get that money back from that whole shipment I had to ship back because it was all damaged when it came? Did that ever get what? And I'll have to write it down to take care of it. You stop whatever you're doing, you write it down, blah blah. And then you're doing something else, and the vendor calls and they're asking about something. You're like, oh yeah, I'm sure I took care of it. Let me look right now. And then you stop whatever it is you were doing and you're looking into it. The point is that it's interrupting your whole train of thought. When you know that you're dealing with all of those issues one time a week, it makes it so incredible. Also know, I did not know this at first either, that you can tell any vendor, because let me back up, because any questions or thoughts about finances can just be put on a note. So then you could just simply open up a note in your phone and just say, check on RTV for XYZ company. And then you'll go to that note when it's your 3-hour time. And know that if you get a vendor calls, do not let the vendor control how you spend your time. Do not let the vendor anyone control what it is that you're doing and ruin your productivity, right? You're giving your power away. So you can tell a vendor that says, hey, I'm happy to look into that. My bookkeeper, even if it's you, my bookkeeper is in on Thursday afternoons from 1 to 4. So I'll get back to you after that. Okay. Even if it's you. But then you have that, that's when you're going to do it. It's going to make it's going to make such a big difference. It's going to make such a big difference. You are not your numbers. That's what I want you to know. Don't be an ostrich. Don't be an ostrich. You are not your numbers. Don't stick your head in the sand, which is what so many people do because they get overwhelmed by it, right? I know that you guys don't, because that's why you're here. But I'll tell you that even sometimes I can feel overwhelmed about things. And always when I sit down and look at all, it's never as bad as I thought. Never. I mean, it's powerful when you dig into it and you can look to fix things, right? So that's why you owe it to yourself to set that appointment. Another thing to do is to consistently check your credit card interest rates. Listen, I'm all about having a structure for this stuff so that you don't have to think about it, so that it just comes out of your mind because you know when you're going to do it. So I recommend tying a whole bunch of stuff to your store's anniversary. I recommend checking your credit card interest rates the month of your store's anniversary, and then 6 months later to ask credit card companies if they can lower your rates. The other thing you can do is you can ask them. Don't just take no for an answer. Ask them, can you tell me why it's no? And can you tell me what I can do to fix it next time? And if you don't get a good answer from that person, whoever answers the phone, call back, because I've been shocked in my own life as I've had to do this, how they will tell you, you'll get people who will tell you exactly what they do, what they will do. And honestly, usually they're very pleasant and helpful about it. And if they're not, hang up. You don't have to talk to them, right? Hang up. This is a sign of being a richer smarter retailer, not a sign of desperation to ask people to lower your credit card rates. Do the same thing with your insurance rates and your credit card processing fees. Get another quote on all your insurance rates. It's shocking to me how I would have stores that were on the same block. In fact, at one point I had four women's clothing store or three women's clothing stores that were on 2 blocks together in downtown Chicago. And the interest rate, the insurance that they all paid was so different. It was crazy. I had them all recheck it because it's incredible how it can make such a big difference. And of course, the quality of the insurance company, blah, blah, blah. But just double check about it because most people don't question it. And, and often it's based on what your credit rating is, your personal credit rating. And as your personal credit rating goes up or down, that impacts what you pay for insurance too. So that's why I really recommend these 2 things. And of course you can schedule it any other time, but I'm just telling you, I have found just to do it consistently, like to know that that's when you're going to be done. And then also when someone calls to ask about it, you can just tell your team tell your team to call them back on that month. And you don't even have to talk to the insurance people. You don't even have to get the message about the insurance person or the credit card person that called, the credit card processing person that called. You can ignore all those calls for the whole year. You're welcome. When I thought of doing this, I was like, what? Like, how was this not so clear to me before? Because it makes it so much easier to just put everything in this one particular time and to know you're dealing with it then. All righty. Talking about cash flow. If you can't pay, you've got to pick up the phone and call your vendor and be honest and don't let your guilt talk. Just call your vendors in advance. Let them know you're not going to pay on your due date. We've done it with clients where, like, if we've looked and cash flow gets horrible at a certain month, usually what we try to do is that we work to come up with the things to fix it, right? But on the other hand, we've also called ahead of time and said, listen, we're going to need extra time this month. And honestly, you'd be shocked at the people that will give it to you. Not all, for sure. Some people won't, but you have to let them know ahead of time if you're not going to be able to pay. It goes so far into developing a good relationships with them. But do not make mistakes. Do not make promises you can't keep. They will ask when they can get payment and how much they can get. And you're going to want to tell them a date that you think they'll want to hear. And you're going to want to tell them an amount that you think they're going to want to hear because it makes you feel better. And I'm telling you, it's better to tell someone that you can pay them $25 a week and that you'll increase it, or to ask them to call me back in a month and I'll be happy to reevaluate it for you. But you've got to make sure that you are promising less and over delivering, because that makes you look like a rock star. Do you know how often vendors get screwed by retailers? They get screwed so often. And so that's the power of this. That's the power of this. And if you don't know yet, say you don't know. Say you're not going to know until you meet with your bookkeeper on Thursday afternoons, but tell them you will be paying them and assure them that. Communication is key. Yep, you're right, Juanita. And processes make your whole life so much easier. And listen, they might try to pressure you. Simply remind them that you are being honest and forthright with your situation. Their job is just to get, I honestly felt that when I've shared with you guys how I was almost bankrupt twice before I turned all this stuff around. And that's why I can teach all this. And then I got so passionate about helping people. As you can tell, I get so passionate about helping people not make the same mistakes I did. And I would swear that some of these people, that it was their job just to break me and make me cry and make me feel like total crap. And so you can always politely hang up, which I just never thought of. I don't know. Anyway, and I just would keep repeating, I am being honest and forthright about my situation. It's not going to do either one of us any good if I commit to something I can't follow through on. I am a woman of my word. I am sure that you've gotten screwed by many people. It's not what's going to happen here. Believe me, a call and a promise for a small, consistent payment is better than how most retailers simply avoid calls and don't pay. Many times, a vendor will even continue to ship you as they see that you're showing integrity. Really, it's incredible how far you can get. It's incredible. And it gives you such peace of mind. You guys, so now you have a choice. Now you have a choice. You can take what you've learned so far and decide to use this and go it alone. And you'll get results for sure. But I want you to really ask yourself, do you feel that it would be so much easier for you and that you'd get better results with help, with a guide, with someone who knows what to do and who can help guide you around these obstacles and who has made this super simple to implement? So you can either go alone or together, right? You want it to flow like this, right? You want to hear that rush of the water flowing, right? And so I want you to know that you do have one more option. If I were you and I wanted a flowing cash flow, and if you've been stuck for a while in that dry spot where it's all just dead quiet, choose this path. Choose to become a richer retailer. Choose freedom and less worry and more peace and more freedom, more time for what you love. Not just hoping things are going to turn right, but a strategy to achieve it. And this is what I have for you. This is how we can help. My team and I have set aside time to just talk to you specifically about how to apply these ideas to your life, to your store. And this is a customized approach so that you'll get the greatest impact right away, because we understand that while what I'm talking about here will work for everyone, we also understand that every single one of you has individual circumstances that play into this. And so what you've got to know is that whatever challenge you have seen you're up against, we have seen it before and we've helped people overcome it. Like really, literally, we've never come up against anything that we can't help you overcome. And we can't give you suggestions. During our call, this is what you have to know, is that you're walking away with a plan. We're going to create a plan for you to change this, to end the year strong and to start next year on fire, and to start that cash flow flowing. We'll be able to help you do that. We're going to also see opportunities that you can't see. You know what we say all the time is that when you're in a jar, when you're in a situation, imagine a jar, you're in a situation, you can't read the label. You can't. You can see that there's a label there. You can see that there's a problem or something, right? But you can't read it. We can read it. We can read it. We can read it from the outside going in, and we've had experience with it. And I'll tell you that we will find $5,000 hiding in your store in 30 minutes. Absolutely guaranteed. Guaranteed. We do it every time. And this is absolutely free. We're offering it absolutely free just to help. Just to help. The only catch is that it's not for everybody. You've got to be open to new ideas, willing to try something new, to shift your mindset. We want to talk to independent retailers who are super clear that they want more, that they're not willing to tolerate dealing with cash flow. I can tell you that our clients now, when there's cash flow problems, they don't get worried about it because they've been through it. They know what to do to fix it. And that's what we want for you. We want you to be able to get more impact, more money, more freedom, more fun. That's what being a richer retailer is. So if this is what you want to, book a session now. Here's your call. Here's the link for it. The team will put it in the chat. RETAILmavenscoaching.com/profit activator, because that's what it is. We're going to activate that power for you. We're going to activate that cash flow. And of course, there's limited times available. I'm sure you can imagine that. And why do we do this? Because you guys, we have the best job in the world, right? Juanita and Cecilia, like, don't we have the best job in the world? When you see the impact that this has on retailers, oh my gosh, it's so powerful. And we just want to help you because you can't always see it on yourself. And when you're open to trying new things, you're going to learn the math that makes you money. You're going to be able to manage your inventory and cash flow better. And you're going to live a richer life in all senses of the word by asking, what else is possible? What else is possible? It's incredible. We'll get on the phone for 30 minutes or so, and we're going to dig in and we're going to find you that $5,000 for sure, as well as help you come up with a plan for what you need to do to go forward. That's what we will do for you. It's what we do every day. We just love it so much. We love it so much, how much we're able to help other people. Because so often you just can't read that label when you're in your own place. When you're in that place, you can't see what you don't know. So we'd be honored to help. It would be an honor and a blessing to help you. You'd be blessing us. So yeah. Oh yeah, exactly. I love what you said, Cecilia. Book your free call so we can help you find the lowest hanging fruit for your cash flow right now. Because how guilty are all of us about looking at that apple tree, and each one, and that apple tree is full of all these beautiful red delicious apples that, or maybe Honeycrisp. I kind of love Honeycrisp the best. And you kind of think that, oh my gosh, that one right there, that looks like the best one because it's like a bright shiny object. You'll hear something or whatever, and you'll think, oh, that's what I have to do. So you climb up so then you start climbing up that tree, and it's hard. It's not easy. And you get to the very top, and you pull that apple down. Well, you've you've then climbed over all these other perfectly good apples that could make a big, huge difference and you don't even know it. But it's what we know because we guide people through this all the time. So we'd be honored to help. We'd be honored to help. All righty, you guys. Thank you so very much for being here. Book your free call. Anyone else, if you have any other questions, don't hesitate to ask. It's why we're here. Don't hesitate to ask. All right. Thanks again, everybody. You're so welcome. Thank you very much. Have a fabulous day. And here's to being a richer retailer, right? Cheers to you. Cheers to you. That's what we want to help you do, is get there faster. Happy retailing. Bye-bye now.